Hi, welcome to this video today, which is on the subject of Forex chart patterns. Which work the best, which will give you the highest probability in terms of helping you achieve consistent profits from the Forex markets. Now, the overwhelming majority of beginners want to trade chart patterns. This video is a warning for anyone who wants to do pattern trading. Any pattern you choose, okay, doesn't matter what it is, a Gartley pattern, it could be head and shoulders top or bottom, pattern is irrelevant. The statistical chances of you making money with any chart pattern are just basically no better than a random pick. And that has been statistically proved. Okay, none of the world's top traders trade patterns. Now, in terms of this, it's surprising that pattern trading is so popular. Why is it so popular? Because a huge amount of educators showing you how patterns work in hindsight. Note the word hindsight. They never produce any evidence they've made any money, okay? It is a huge industry, and a lot of educators make massive amounts of money from naive beginners by taking advantage of a couple of cognitive biases we're all programmed with. They're called the clustering illusion and hindsight bias. And also, they come from what's called the Texas sharpshooter fallacy. If you let those biases come into play, you'll believe that you can trade successfully with chart patterns when the evidence clearly shows you cannot. Okay, now I want to go through why chart pattern trading is a way to lose your money, the evidence they don't work, and then how to use technical analysis in the right way to make profits from the markets. Now, the first thing I want to do is show you a short video clip which just basically illustrates the Texas sharpshooter fallacy, the clustering illusion and hindsight bias in general terms. Now, our cognitive biases fool us in everyday life, and these cognitive biases also come into play in the Forex markets. Now, the clip itself, only about a minute 30 seconds long. Watch it. If you do not quite understand why it is so relevant to Forex trading, I will explain after you've watched the clip. Right, here's the clip coming up, then we'll be back to discuss all the points in more detail.
Abraham Lincoln and John F. Kennedy were both assassinated by a man with 3 names, 15 letters long. John Wilkes Booth and Lee Harvey Oswald. Neither killer would make it to the trial. Both men were shot on a Friday, sitting next to their wives. Lincoln in a Ford theater, Kennedy in a Lincoln made by Ford. What are the odds? Why do deaths always seem to come in threes? How did the basketball make it in there from all the way across the court? Why did the tornado spare the church? Some things in life seem too amazing to be coincidence, too odd to be random, too similar to be chance. When you desire meaning, when you want things to line up, you see patterns everywhere. Order makes it easier to be a person, to navigate this sloppy world. You're born looking for clusters where chance events have built up like sand into dunes. Picking out clusters of coincidence is a predictable malfunction of a normal human mind.
Welcome back. I think that's an excellent clip in terms of illustrating the sharpshooter fallacy, the clustering illusion, and also hindsight bias. If you're not sure why it's so relevant to Forex trading, we're now going to discuss in more detail. I've written up some points on a storyboard, so let's go and take a look at them. All right, just written up some points now in terms of that clip. First of all, what did we see? We saw a guy, he's not a sharpshooter, he shoots in the general direction of the shack, okay? Fires off numerous shots, some will just cluster together. He doesn't mean to do that, just shoot enough shots, that is what is going to happen. Then after the event, he can go draw a bullseye around the cluster and make it look like he's a sharpshooter. The effect, the shots on the bullseye had a random cause. The target is hindsight. Okay. Now, in terms of this happening in Forex trading, with pattern traders, of course it does. In terms of, chart formations or chart patterns you see on a chart are not caused by past price action. There is this ridiculous view that the chart kind of operates in isolation, and that what happened in the past should repeat in the future. Predictive chart patterns assume that the cause of the pattern is within the chart, which of course it isn't. The technicals are the effect, or the chart pattern. Sentiment towards the fundamentals are the cause. Okay, so the formation is effectively random. It's a clustering illusion in hindsight, isn't it? What traders tend to see is the patterns that did work. They don't see the ones that didn't work. Okay, and a lot of people online take advantage of that. Okay, now in terms of any chart pattern at all, if you look at enough charts, you're going to see it. It's going to come up at some point. And someone did something which I thought was very amusing. This lady, I think she was The Economist. She created the vomiting camel chart pattern. She did it as a joke. And then you had all these people looking at loads of charts and seeing the vomiting camel. They've taken it seriously, okay? It's a clustering illusion, okay? Now, in terms of what we want, generally, we want to see order. We want to see meaning. The clustering illusion comes in all the time. Our brains are designed to see patterns. They want to seek meaning. In that video clip, there was similarities between JFK and Lee Harvey Oswald. Are they amazing? No, of course they're not. What's being focused on there is just some similarities, a few similarities, but how many differences are there? There's probably thousands, isn't there? They were different heights, they were different weights, they were born in different states, they went to different schools. You can go on and on and on. We look for the similarities, not the differences. That applies with chart patterns. You look for the ones that work. You don't look hard enough to see the ones that don't work. Now, in terms of none of the world's top traders use patterns, that's a fact. They do not use predictive patterns. They use technical analysis maybe, but not predictive patterns. You just go and look that up, okay? Numerous statistical tests you can look up as well, which have proved the randomness of any chart pattern. None is any more reliable than the other. Just in terms of patterns, okay, I've just want to give you, well, it might be a surprising fact to people who've looked at these pattern theories: Fibonacci, Elliott wave, and Gartley. Fibonacci, 16th century Italian mathematician, his number sequence has got nothing to do with trading. If you look it up, it was just simply designed to show exponential growth as an equation. Then hundreds of years after Fibonacci had died, it was kind of hijacked by the investment community that numbers in the sequence and ratios between them could give you clues to how far a market might go or retrace. Trading Fibonacci numbers in the market, sometimes they work, sometimes they don't. Fibonacci, if he was about today, would be totally bemused that his number sequence is used in trading. What about Elliott wave? Now, Elliott, who designed Elliott, or came up with Elliott wave theory, how much money did he make with it? Okay, predictive pattern strategy. He actually made the bold assumption when he was around that he could predict the future in anything, not just financial markets. You think he would have died extremely rich. He died in abject poverty and spent a number of years in mental institutions as well. Okay, what about Gartley? He was an obscure newsletter writer in the 1930s with a small following. When he died, his theory basically went with him. And then about, I think it was 80 years later, someone, in inverted commas, discovered its effectiveness, and put it forward as a great way to make money from the markets. It's extremely popular today. Gartney never traded it. You can look that up as well. So, this pattern trading that is promoted online, it's a compelling story. It's something that appeals to traders. Just look at a chart, spot the pattern, you make money. Forex trading is not that easy. Okay, now how do you use technical analysis like a pro trader? Well, you don't use predictive patterns for a start. You want to focus on big levels of support and resistance, breakouts, that sort of thing. Look at volatility. But in terms of using that simple technical analysis, you need to know what's going on behind the chart to give you a directional bias. So you need to know the sentiment towards the fundamentals and basically where the big money is positioned in the market. Then your technicals can be highly effective. You've got directional bias that can help you get in with a good risk to reward, and also the technicals can help you manage the trade and also help you set a target as well. Now, in terms of pattern trading, if you think it works, just go and look up the facts. Okay, if you wish, you don't need to take my word for it. In terms of the video, that's it for today. However, in terms of if you want to get more Forex education on Forex trading strategies that work, how to use technical analysis the right way, and also receive ideas in terms of best trade setups, just join our mailing list on the link beneath this video and we'll send you more info. You can also join our Facebook group and follow our Facebook page as well. Thank you very much for watching this video. Hope you found it informative. Take care and have a good day.